Greetings, Algo Artisans. We're going to take a look at Ethereum today and how it might do over the next few months. Also, we're going to take a brief look right before that at some of the data coming out in the next couple of days. Market could get really exciting, so let's jump into the data right now. Quick reminder that nothing we say in any of our videos, work, or website is to be used or construed as investment advice. Please consult a licensed investment advisor before risking your money on the markets because you can lose your money. It's risky. Okay, so we're looking at forexfactory.com and we have covered this over the last couple of days, so I'm not going to spend a lot of time on it. Just a quick reminder, we've got CPI coming out 8:30 AM EST tomorrow. That's about an hour before the market opens, and this might have a drastic effect on prices, especially in the Forex market, but it would hit every single market if the actual data is different to the estimate. And the same thing happens on Friday, although it will be less of a surprise because the CPI is the bigger number here, but the PPI is its cousin. Basically, it is the producer's side of inflation, while the CPI is the consumer's side of inflation. And inflation is the primary concern right now for the Fed. Fed has a dual mandate, and one of them is to keep inflation as it stands at about 2%. That's what they want to see. And in order to do that, they have been hiking the interest rates to slow the economy down. And the market sees it such that if the rates get cut, money will get cheaper, markets will go up, and the dollar will get weaker. So anything traded against the dollar at that time is going to see things go up. For example, Microsoft traded against the dollar, Microsoft goes up. Now, it might be temporary, but if the estimate is way off, if the estimate is higher than what actually happens on inflation, if inflation comes in very cold compared to what the estimates are, then you can see a lot of markets go up pretty hard. And at this point in the game, that is what a lot of people want to see who have a lot of pull, right? We're in an election year. The incumbents want the market to do well. The question is whether or not they want it to do well at this time. Now, we all know that the inflation numbers are cooked, right? I think we can all make a pretty safe assumption that whatever they're telling us is not exactly the truth. And with that being the case, they can have a little bit of wiggle room to make the numbers say what they want them to say. So that being the case, we're going to take all this data with a grain of salt. But as it hits the market, as this data actually comes out, the markets will be affected, and it will be affected as per this data being above or below estimates. So let's jump into the charts and take a look at Ethereum on a very high time frame because we're at a critical time in the crypto market, and it looks as if price might have made its bottom with Bitcoin. We looked at that. We talked about it this morning. Bitcoin went down again to 53,000, and it might not see prices lower than that until perhaps after the bull market is over. It might also drop down lower. So if that's the case, that is a different look on Ethereum because Ethereum is greatly controlled by Bitcoin. Bitcoin goes up, Ethereum's going to go up. Bitcoin goes down, Ethereum's going to go down. However, typically in a crypto market cycle, you will see a period where Bitcoin has done what it's going to do and it takes a rest. It even drops a little bit and then it finds a market stasis and you'll see Bitcoin lead the alts. It's what's happened in prior market cycles. It doesn't mean that's what's going to happen this time. However, it tends to be what happens historically. And there's a lot of push on ETH right now. There's a lot of people excited about Ethereum. And quite frankly, there are a lot of very important people who own Ethereum. And when very important, very wealthy people own anything, you can depend on a lot of marketing and even financial backing to make sure whatever that is performs. So it would not surprise me to see Ethereum do really, really well on the next few months as Bitcoin calms down and gets ready to gear up for a larger move. So let's take a look at what that might look like. This is the daily chart on Ethereum. And Ethereum has developed really on a high time frame this really wide range. And this is a little formative, but it's looking pretty solid where price is rotating between about 4,000 and 2,800 back and forth in this large range. And if price were to go ahead and touch the top again there, I think I would be a little more confident that this range is in existence. However, in the meantime, we do have some miniature areas where ranges have been built as well. You have these areas where price has gone back and forth and built up liquidity nodes basically. And when price does that, it will want to go back to those areas. And I have marked them out with some of these rectangles. Now, this current area that I do have marked out with a range type rectangle, this rectangle that I'm about to move right now, that is very formative. I think it's okay to call it a range. It's just, there's not a lot of data yet. And you can see that I have placed a liquidity node, this yellow down here. This is from data from this morning. Price has gone down and barely touched it, but there's a fair amount of liquidity in this area. So price may want to to grab this before it goes up. Now, the fact that it came down and stabbed it just a little bit, we zoom in on this so we can actually see it. You can see that this little candle right here, this little blue candle, this doji did come down and touch that area, but there's more liquidity below. So I would expect for price to possibly come and grab that before it goes up. Maybe just a little bit deeper of a stab. Might not happen at all, but it does look like Bitcoin does want to head up another few percent. And if that's the case, Ethereum would be able to do the same. I would suspect that Ethereum will come up minimally to about 3,200, right about here. And I think that maximally, at least for the moment, in the near term, this liquidity zone up here is where it will be attracted to. It'll be this 33.97, basically 3,400. Price probably will want to head up and grab that liquidity right there. So that's a decent play for Ethereum. As it stands, Ethereum has not broken out of what appears to be this range. We have a couple of candles here that poked the top of a range, creating this resistance there, here, and here. And price still hasn't been able to break and close above that. So I wouldn't be looking to go long on this until two things happen. For one thing, I want price to go above this line that I'm going to code yellow. I want to go above this line, and the algos need to favor a move up. Now, this is the daily chart, and as it stands in the daily chart, the algos do favor a move up, which is why we're seeing price heading up, even though it's been doing so kind of slowly over the last 4 or 5 days. Now, if I were to head out and look at the weekly chart, I would tell you that the algos are a little cool, right? Price might stagnate where it is, but in the end, I think it's got a little bit more down to go. There's always that chance that price does flip around and start to head up in a way that the weekly algos eventually turn around. Remember, these algorithms, these indicators, they lag. Price action tells the real story. And what we do have here is a double bottom. So if I were to go ahead and draw a square around this area, these two wicks going down, let me code this a different color, make it easier to see amongst all these rectangles here. This kind of pinkish square that I've drawn here, that's a double bottom, and price did head up after that. So technically, when price comes down, creates this formation of two wicks stepping down. There's a little bit more definition as to how that works that I explained over at algofactory.tech. But once that happens, there is a decent probability that price will continue up from here. There's enough of a little basis build down here based on price action for price to head up. So what would the trade look like if I were to take such a trade? I had it drawn on here a little while ago. I would look for price to break above this area. I could buy it right then and there if the algos look good on this, and quite frankly, they have to look good on Bitcoin as well. I could also look for a pullback, whether it's on this time frame or a lower time frame, and I could go ahead and take a trade as such. If this liquidity was still down here, I might put my stop loss below that because price may stab down to grab that before it goes up. But even with that kind of stop loss, I'd still be looking at a 2-to-1, and that's a pretty generous stop loss for an entry way up here. A decent stop loss would be up here, but again, if there's still liquidity over on the Kingfisher.io, right there, I would probably put a stop loss below that and just let this be a 2-to-1 trade and be satisfied. Got to trade what the market wants to trade. We don't want to try to invent some kind of trades that will not go well. We don't want to hope things go a certain way. We want to predict how they're going to go based on what the market wants, and we trade according to that, right? So let's go ahead and take a look at the SP500. And the reason I want to take a look at that is because live, I talked about where it might go this morning. It greatly surpassed those targets. Now, the two near-term targets I had, one of them is this yellow line sitting at 56.62. The next one was this 618 sitting at 56.85. A lot of confluence, 56.62, and this was just basically free alpha that I gave out this morning. Price hit the targets. Price was down here, down at the 56.30 area, and anybody who's trading these indices understands how to pull some decent money out of a move like we saw today. The stock market is on fire, and it's been on fire for a while, and I don't see that changing, right? I don't see that going anywhere. So I would expect that to happen, and quite frankly, I think we're going to see about a $6,000 SP500 by the end of the summer. I think that, unless something happens, unless we have a drastic change in interest rates, unless a lot of status quo changes, I do expect with this trajectory where price has been going up at this kind of rate, I would expect by, say, end of August, early September to see a $6,000 SP500. Now, I do think there will be a rate cut, and V the Gorilla, who does have his finger on the pulse at a very high level, also thinks there will be a rate cut coming at some point soon. But again, we don't know what exactly is going to happen. We have an election coming, and that election is definitely very important. Big news, presidential election. And if we saw a massive drop in the stock market price in September, that's not going to bode well for the incumbents. And the incumbents want the stock market to continue to go up, and they're probably going to force it that way. They've been doing it all year, and they're probably going to do it even more. So that being the case, I do really expect to see a $6,000, really $5,950-ish SP500 by the end of the summer, right? That's definitely, I mean, I could just simply take a long and just wait for that to happen. I'm comfortable doing that. I meant to do it this morning and I never actually did it, but it's not too late. We're going to take a quick look at gold. Now, gold is bullish, although of course this is a slow time for gold. The reason I say that is because gold had a massive year, broke its all-time highs, and it just continued up, and this happened around the end of last year, beginning of this year. This consolidation goes back a couple of years, going back to 2020, almost 4 years. And once price breaks something like that, it's going to move for a long time, and then it's probably going to make another consolidation. So the main question is how long is it going to consolidate in this area? I think it's reasonable that price might go up and out. Now, it might bounce down and take another round, but I don't think it's going to take too long for gold to pop out. The high time frame is very bullish on the algos, so at some point gold's going to want to pop above 2400 and continue up, and my first target for that would be 2500, and then as price continued up, my next price would be 2600. I probably would front run those a little bit, but those are my two targets, and I do expect to see that by quarter four. I think quarter four, even late quarter three, we might see something like that. It's all going to depend on how the rest of the market does, how much money is going to go into gold, and I can tell you right now, a lot of money has gone into gold, especially physical. This is an international thing, so very exciting week, though. Again, the big news is going to be inflation, and that's coming tomorrow and Friday, so I would be definitely careful waiting for that data to come out. Once it does come out, I might look for some trades, might surf that volatility a little bit, but I will not be in any trades until that happens, and probably I won't be trading the European session tonight. I'll probably take a break, get some sleep, so on and so forth. I hope this video was helpful. Please come over to algofactory.tech. We teach people how to build their own trading method, otherwise known as an algorithm. You don't have to know how to code, but if you do code, we can put you on the path to where you can build something that trades for you while you're not at the computer. If you just want to trade manually, which is what most people are doing, then that is, of course, something that we can help you do and help you have the capability to possibly extract money out of these markets on a regular basis. And while we do focus on crypto for a lot of these videos, I'm actually primarily a Forex trader, and you got to know that crypto doesn't go forever. It goes for about a year and a half, and then for a couple of years, there's not much going on in crypto. And if you want to be a trader, you're going to want to understand how to really trade, how to put on those big boy pants, because what's going to happen is eventually crypto's going to flatten out, and the meme coins aren't going to be what they used to be, most likely. I've seen it enough times. I've been in this game since 2017. I don't expect that to change. So come on over, learn how to trade. As a matter of fact, we got some pretty happy customers who are already down the path of success in their algo building. Let's hear from one of those right now.
Hey guys. So I've been in Algo Factory for around 10 months now. I held crypto, but I hadn't traded crypto or Forex before. Since joining, I've learned a massive amount that I use almost daily for trading, reading charts, using indicators, and understanding different aspects of the market. So I found the course incredibly easy to follow, and the interactive style of teaching is incredibly beneficial. So now that I'm comfortable in my trading ability, I'm starting to invest more capital, and projections are looking very promising. My goal is to be trading full-time in the future, which I believe is highly achievable. I've met an amazing community of like-minded people and made some great friends. In my opinion, both V and Cowboy go above and beyond, and I highly recommend joining Algo Factory. Thanks for everything, legends. Cheers.
Don't forget, algofactory.tech, trade your job, upgrade your life. We'll see you on the next one.